High-Tech Pipes reported its numbers this week. Revenues saw a jump. Margins too saw a rise compared to the last year. Brokerages are gung-ho on the prospects of the stock going ahead. Let's discuss the quarter gone by with Anish Bansal, the CEO of High-Tech Pipes. Mr. Bansal, thanks very much for taking out the time. Let's talk about this quarter and what are the key highlights?
Good afternoon. In quarter four, we achieved a net sales of 380 crores versus 319 crores in FY18. So this is a jump of about 20-25%.
Okay. Can you talk a little bit more about, what is it that you're going to be looking forward for as you step into FY20 and what are the key growth drivers thereof?
So we see a very active, demand from especially four sectors: affordable housing, piped water supply, city gas distribution, and infrastructure. In infrastructure, airports, metro rails, power distribution, and telecoms will be the major growth drivers in FY20.
Okay, and how does that compare to FY19? Is it going to be a substantial increment?
Yeah, we see at least 20-25% growth coming from these sectors. This will be additional from what there was last year.
Okay, would that also translate into a bigger market share for you?
Definitely, yes. So we are hoping for a market expansion for our products.
By how much do you think you'll be able to expand?
We are expecting around 20-25% growth in all our key areas, whether it is infrastructure or the agriculture or irrigation. So we see a 20-25% jump in the demand from these sectors.
Mm-hmm. Let's talk a little bit more about how you're going to capitalize on these growth opportunities. Are you currently in a comfortable position with regards to capacities, or you think you'll need to expand in a meaningful way to target all of these various segments in the growth outlook there?
So we are expanding our capacities in all three regions, north, west, and south. Right now, as on FY19, our capacity was at 425,000 tons, and by end of FY20, we shall be close to around 6 lakh tons per annum.
Anish, would a higher capacity availability lead to improvement on the operating metrics, or would this 5.5-6% roughly be the standard steady state margins that a business like yours enjoys?
So we see some margin improvement, when we go for higher capacities, because scale of operations, they start kicking in. And, our raw material purchase costs, they go down, our efficiencies, they kick in. And overall, the overheads also get distributed among the total volume. So definitely, capacity expansion is also a way forward for bringing the cost down.
And would the large portion of your capacity come on stream only in late FY21, or would it happen before that?
From 425,000, we'll be going to 5 lakh tons in quarter 2 of FY20 and to 6 lakh tons by end of Q4.
And typically in these capacity expansions, does the utilization level move up rather slowly, or do you hit reasonably high utilization levels within the first 3 months?
In our industry, about 80% is the optimal capacity utilization, which is there. So we are doing around 75% capacity utilization for last 4-5 years.
Okay, and just want to get in a sense from you now, while you've spoken about a 25% increment or a growth rate within each of these individual segments, is your bump up on utilization, capacity utilization going to be enough to cover up the same, or like you said, the additional new capacities that you build in will also have to be commissioned equally at the same pace?
We have to keep up both the things parallelly, to keep the 75% utilization from the current installed capacity, and going forward, whatever the incremental capacity will be there, we target it to achieve the highest capacity utilization in a year. Are
you witnessing fluctuations in pricing of late, and do you see a stabilization in terms of raw material pricing?
Raw material prices are reasonably, they are moving in a very tight band. So we don't see very volatile scenario from now on.
Okay. Got that. So we can safely assume a growth rate of 25% going forward?
We hope so. We are hoping to do it.
All right, we'll leave it at that, Anish. Thank you so very much for joining in.
Thank you.
That is the management at High-Tech Pipes, looking strong, good set of numbers. It's not a very liquid stock, just about 14,000 odd shares have been traded, 1% higher, but the management's pretty confident of achieving growth rates of about 25% in all of the sectors that it currently operates in, hopes to up capacity and utilization rates.